Hello, my name is Steve Bigelow with the Candlestick Forum. The markets are still in an uptrend. We saw that on the basis that after last week, when we saw the Doji sandwich close above the T-line, and then they gapped it again above the 50-day moving average. Simple rule, as long as we're above the T-line, we're in an uptrend. However, there's a little bit more added factor to that. Notice that we've got a big island reversal. You can draw right around this without touching anything. That usually implies there's been a strong reversal, you're in an uptrend. The same scenario was applied to the NASDAQ that had some profit taking on Friday. No, that would have been on Thursday. But then they opened positive and traded positive on Friday, telling us the T-line was not being breached. Stochastic still heading up. But more importantly, the S&P 500, after trading lower on Thursday, actually gapped up above the previous day's open and traded positive. That's still a very strong indication with that trend kicker signal that the bulls are definitely in control. Is this a Santa rally? Could be. Call it what you want. But whatever your analysis is, it becomes much more clear when you can see what the charts are telling you as far as staying above the T-line. Couple strong sectors. The home builders are still acting well. Toll Brothers, Beezer, Home have all been acting well. And right now, TMHC looks like it's doing a double doji. Get ready for it to move higher. The other sector is oil and gas price or stocks are starting to come back up again. So those can be bought. But here's a simple analysis of what is happening in investor sentiment. You can see on our recommendation of LWLG, we recommended it when it broke out because of this little slow curve. Basically have a wave 1, wave 2, going into wave 3. This information right here, where they can't close really below the T-line and then do a slow curve breakout, is a strong indication that the bulls are now, after consolidating, back in control. We apply that to Ford Motor Company. Now, we've been recommending Ford Motor Company as a long-term hold for quite a while. Not because there was anything special, but just the fact that it stayed above the T-line, and you don't usually use fundamentals for your analysis, but you should if you're going to be in a long-term situation. And right now, Ford Motor Company reported that they are stopping taking orders for their electric F-150 truck because they can't keep up with demand. So essentially, you're looking at a company that has the marketing, the distribution, and the manufacturing, and all they've added is a product that everybody wants, which is electric vehicles. That allows for the expectation that when you break out like this, either on a short-term breakout for short-term trading or for a long-term hold, this is an excellent setup. This is what we call observe the obvious. When we can see that there's indecision and they're using the 50 right as your support level, this becomes an extremely high probability trade setup, especially when they start taking it back up above the T-line. In this case, they actually gapped it up through the T-line. But this is where you observe the obvious. Where was everybody buying? The candlestick signals revealed that they were buying as soon as it would hit the 50. Where's your next trade expectation or your next target? Wave 1, wave 3 should take you way up further. Again, this is not rocket science. This is just using the information that the Japanese rice traders have incorporated into graphics to tell us what's going on in investor sentiment. So not only in this upward market do you still have very strong bullish trades, but the bearish trades are still working. You can see the dumpling top. You can see the blue ice failure making this the next likely target. They took it back up and closed back below the T line, still making this a likely target. This clearly illustrates that out of all the trading entities out there, no matter which way the market's going, you're going to find good short positions in an uptrend. You're going to find good long positions in a downtrend. So as long as we can recognize wave 1, wave 2, wave 3 failure, you can stay short as long as they cannot close back up above the T line. So right now, the overall trend is still bullish as long as the Dow stays up above the T line as well as the 50. Again, you've got kind of an island reversal that would imply a kind of a 45-degree going into the end of the year. Now, that's kind of conjecture, because what do we do as far as our analysis of a trend? You stay long until you see a sell signal. That sell signal may be next week, or it may be next year. Just do what the charts tell you. That'll be it. We'll see you. Oh, we also want to mention, we did a mini training on day trading setups on the December 4th weekend. We're going to do a full day training going into much more detail and much more setups on December 18th. So you might want to join us for that. You get a lot of information in these training sessions. Unfortunately, when we schedule the mini trainings for 1 hour, we kind of project they will go for an hour and a half. Past December 4th, we went for 2 hours and 30 minutes. We do our full day training as 4 hours. Expect at least 6, if not 7 hours. That'll be it. We'll see you in the chat rooms.